Welcome to Barchart's weekly series of webinars designed to help you, the trader investor, better understand a variety of trading strategies and concepts, as well as the pages and tools Barchart provides to help you make a more informed investment decision. Today's subject, using the MACD oscillator study to find trading opportunities. The moving average convergence-divergence oscillator is a multi-purpose versatile indicator that can signal buy signals, alert traders of changes in momentum of existing trends, and confirm market trends throughout multiple time frames. Good afternoon, everyone. My name is John Rowland, and I'm Barchart's head of trading education. And today I'm going to dive into this MACD indicator, and hopefully I'll explain to you the math that's behind it, what to look for to enhance potential trading opportunities, and the importance of not just relying on one time frame to give us a signal, and that we want to use multiple time frames to confirm our trends. And this is going to keep us out of low probability trades. Today with me is my partner and our moderator, Barchart's project director, Jean Baker. Hello, Jean.
Good afternoon, John. How are you doing out there on the East Coast? Nice fall day, I hope.
Yes, we finally got the change in the leaves and change in the weather.
Oh, good.
So, Did you have a good Halloween? Did you get a lot of trick-or-treaters?
I did not. I really counted them on 2 hands. That was about it. And it was a gorgeous day here in Chicago. So I am not on a really busy street. So the street won over, got all those kids. It was fun to see the little kids out though. How about you?
Yeah, it is always kind of cute when they see. I saw one where the father was dressed as Willy Wonka and the kid was Oompa Loompa. It was really cute. But,
good one.
All right, so let's get into our webinar for today. So today's session is for educational purposes only, and all trading and investing involves risk. And we at Barchart recommend that you consult with a professional financial advisor to see if you have the ability to bear risk in the light of your financial condition. And under no circumstances shall we be liable for any losses or damages incurred as a result of trading or investment activity that you or anyone else engages in based on any information or material you receive through barchart.com. Okay. So let's go back to our Qs chart here, and I'm going to just blow this out so we can see this a little bit better. And the moving average convergence-divergence oscillator, or what is commonly called the MACD. And now this is a variation of a moving average crossover. It's a trend following momentum indicator. And it's the difference between 2 exponential moving averages, an EMA. Now, what is an EMA, you ask? Well, it's just a moving average that puts a greater importance, a weighting, to the latest inputs, and therefore making it more sensitive to recent price movements. Now, the MACD typically consists of a 26 period EMA that is subtracted from a 12 period EMA. Now, this value is called the MACD line, and that is what is represented here by this gray line. That's the difference between our 12 and our 26 EMA moving averages. Now, the MACD line will oscillate above and below 0. And if the resulting value, the MACD line, is positive, it indicates that the average price during the last 12 periods is greater than the average price over the last 26 periods. Now, we could see an example here where our MACD line is turning up, is acting positive, but we're still below the 0 line. Now, if I count back from this point here, let's count back 12 candles, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. We can see that for those 12 days, the moving average would be in a positive action. But if we look over the last 26 days from back here, right, that 12-day action is still lower than a 26-day moving average. That's why it is a negative or minus 0 value, even though it is moving in a positive direction, less negative. If the MACD line is above 0, now this is an indication of an uptrend. You can see that well defined over here. Here's our MACD line that is above 0, and you can see the resulting uptrend. A second average, typically called the signal line, is created, and it is a EMA of the MACD line. Now, in other words, it's a moving average of the difference between our two moving averages, and that's typically a 9-period EMA, and that is what is represented here by our purple line. Now, also, we have a histogram, which is the difference between our MACD line and our signal line. And it often appears in your MACD indicator. Notice here we have our MACD line is below our signal line, and the histogram is just a graphic representation of the width of the difference between our signal line and our MACD line. And in this case, our MACD line is below our signal line. That is why we see our histogram on the downside below 0. Here we can see our MACD line is above our signal line, and that's why we have a positive histogram. So we'll talk about histograms and how we can use them in a little bit, in just a moment. Now, when the difference of our 12 and 26 moving average, our MACD line, crosses from below, as we see here, and as we see here, crosses from below from the smooth moving average, our signal line, this generates a buy signal. And so what I've done here is in our stock section, under stock market ideas, we have the eMAC buy signals. And that'll take you to this page. This page screens or scans all stocks that are identifying those who are producing this buy signal, this buy crossover signal. So there's a lot of stocks today. If we look at it, we'll come back and talk about things that we can do. But so far today, we have about almost 200 stocks that are signaling a MACD crossover. Now, right here it says tip. And it says open flip charts and create a template using the MACD oscillator. So let's do that first. So I'm going to go to flip charts. And I want to create a MACD indicator. So what I'm going to do is I'm going to right click, study, and I'm going to add a study. And I can just type in MACD, and there it is, MACD oscillator. I'm going to add it. Now, notice before I add it, there are our defaults, our 12, our 26, and our 9. And I'll add it to my flip charts. Now, one of the things I can do here, if this is something that I want to use every time I'm looking at the MACD page, and I want to be able to see the MACD line, well, I can come here where it says templates. And I can save template. And I can type in whatever name I want of the templates, the studies that I've just added. In this case, we added the MACD. And notice that I already have created a template called the E signal, MACD signal. So the next time when I come back to my flip charts, or any time I use templates, I can just open that up and turn on my MACD signal. All right. So what's nice about this here is we can flip through a lot of these charts very quickly and look for certain setups that we want to kind of concentrate on. Looking at the MACD crossover signal, and then maybe looking at some aspects of some other technical analysis, maybe some chart analysis. So let's, first of all, what we see here today on this example, Atlantic Capital, right? We're getting a MACD crossover, right? The MACD line is crossing over our signal line, and that is giving us a buy signal. And you can see back here, we also got a buy signal too, right? Now, one of the things that we can look at is we talked about our positive MACD lines. And in this case, we have both of our values are above 0, which is indicating to us that this is in an uptrend. But we do also see that the MACD line has fallen closer to the 0 line. Now, we're still in an uptrend. All this is telling us is that our momentum has slowed in this uptrend. Now, when we see our histograms rising or widening, this is a sign of a strengthening trend. Right? The histogram consists of these vertical bars, which represents the difference between our MACD lines. And when our lines are in positive alignment, as we see here, that is another way of confirming a sign, in this case, of an uptrend. Now, the value of the histogram, again, is this recognition of these widenings of our differentials, and that could be a sign of our strengthening trend, and the narrowing or a weakening of our trend. And this could be an early warning sign that our current trend is losing momentum. Current trend is losing momentum. Now, this is not necessarily a buy or sell signal. It's just telling us that the momentum of this trend is slowing down. All right, so we have a, excuse me, I'm really hoarse today, Gene. I don't know what's going on. We have, a lot of candidates that we can go through today, for instance, So like all of our data pages, we can start to screen or start to filter down our candidates. And there's a lot of ways we can filter down, and it really depends on what kind of conditions you might be interested. First of all, we could look at price and volume, right? Maybe I might look at a change in volume or a pickup in volume, or maybe I want to see that the market is making a new high, on a MACD crossover. I could do some technical analysis. Again, add maybe a moving average or a volume average. One of the things that you could think about in terms of a MACD crossover is, hey, maybe we'll look at a shorter period of time frame, let's say a 5-day average volume, and let's see if we can see an increase in volume over, let's say, a month or 6-month moving average, right? We're seeing new trades coming in, new activity coming in as we're getting this MACD crossover, kind of a confirmation of the two. And we'll talk about that in a moment as well. But there are other technical analysis we can do. Maybe you are a fundamentalist. You like key statistics. For instance, maybe we could filter this down by market cap size, or maybe I just want to look for those stocks that have a cheaper price, or price earnings ratios, or sales price to sales ratios. So there's a lot of different ways we can filter down for and what I always kind of want to try to find something a little bit different for you guys. And I was kind of banging my head together on what I might want to do for an example. So, I was thinking that we're kind of in this high price environment. We're seeing a lot of, we're making all-time highs. And if I get a positive MACD crossover, I'm probably looking at a market that has probably already had a good momentum and maybe has paused and now is taking out a new high. And maybe I'm at the end, or could be, a far along in tooth in terms of a trend. So we could look at, let's say, percentage from our high, or we're getting ready to break out of a high. But I kind of wanted to switch it around. What I was thinking about was, why don't we do a little bottom fishing? Why don't we think about, the broader index is rising, rising tide lifts all boats. And let's look at maybe some candidates that have recently been under pressure or have fallen and now have made a bottom and then starting to rise. As technical analysis or technicians, we kind of want to get in the beginning of a trend, not towards the end of the trend. So I'm going to add a percentage from low, and this is what I was thinking about. Let's see if we can find some stocks that have, let's see, let me do this first. Let's go 6 months first, that have made a 6-month low. And let's go, let's say 20% from the 6-month low. We want to see a little bit of a bounce. And then I'm going to add another percentage from low of, let's say, 1 month. In other words, I kind of want to see maybe like a double bottom here. We've made a 6-month low and then we've held, and then maybe we're going to bounce again. And let's do 5%, all right? And if I do that, notice what happens. I brought down our 200 candidates down to this 26 potential candidates. And again, I could just go right into flip charts. And I'm going to add my eMAC. And I can flip through a lot of these, right? Now, what I'm going to find is a lot of these are going to look like this example here, right? In a stock that's kind of just, flatline. There's nothing going on. It's not really attractive in any sense of the matter. But when I was doing this early today, Here's Campbell's soup. And this is kind of interesting. Here we see Campbell's soup has been in a dominant downtrend, and today we're getting that MACD crossover, right? We're still kind of negative in terms of our valuations of our MACD lines, but the momentum, here the histogram is telling us the momentum of this downtrend is slowing. Now we're getting a positive price momentum, and you can see that in terms of Campbell's soup, what it's doing today. But this is what we kind of want to look for, right? Think about what I just said, what we just kind of filtered for. We can see we're in a 6-month chart, and we made a 6-month low over here. And notice that our MACDs down here are very low, our MACD values. And then price came back down and tested that 6-month low. Matter of fact, it actually went just a little bit below that and held. And during that time when it held, you can see our MACDs were going down, but they didn't go below our 6-month low. So in this sense, this downtrend from this low to this low has lost a lot of momentum. This is called a positive divergence, and this is what we want to see when we're looking for buying opportunities, when we're doing kind of bottom picking in this sense, where our market has made a new low or tested a previous low, but the MACD is not making a new low. It's not confirming this downtrend. And matter of fact, in this case, it's telling us this downtrend is losing its momentum. So this is a great way to use MACD in terms of finding buying opportunities. Now, I'm not going to stop there, right? I want to also kind of take a moment and look at a bigger picture and a smaller picture in terms of MACD. So first of all, let's go to a smaller picture, in other words, smaller time frame. And this is a 1 month, and the 1 month default is 60 minutes. And again, you can see on our 1 month, 60-minute time frame, our MACD has already turned positive. We already got a buy signal a couple days ago, and actually 1 day ago. And now our trend is really accelerating, right? A confirmation that at this time frame, we are getting a lot of strength in this momentum. Now, again, look what has happened here in this downtrend in the 60-minute time frame. We made this low down here. There it is. And we tested this low, but the MACD didn't go as far down. So it's telling us that this downtrend momentum has changed. And not only has it changed, but it was a signal right there that we maybe are starting to see an uptrend. Now let's go jump higher. Let's go up to a weekly chart. And again, here we see a little bit of different story in terms of our positive convergence. We still see that our weekly trend is down, but again, our histogram is telling us at the weekly level, this weekly trend is losing momentum. And we haven't gotten the crossover yet, that buy signal at the weekly level, but we see it in the short term, we see it in the intermediate term. So as an investment trader, you might wait, in this case, for the positive convergence or a positive crossover to give you permission to buy this stock. If you're a swing trader or a day trader, you've already gotten that permission from the MACD signal. So this is why it's kind of important for us to do this process, not only just to look at it at the daily level, which is what the buy signal is created on this page, but do that, look at the lower time frame, look at the higher time frame. Now, what I see here is probably what we need to do is only need maybe one more day and get above this resistance and maybe break this trend line, and that might be that extra signal that you would need, or confirmation that give you permission when you get that weekly crossover. All right, so if I like the way this filter is, well, first of all, let's go back to this for a second, and I'll go back to candles. And this is kind of a process I do. So I like this stock. I think I'm going to watch this one for a couple of days. So what I might do is add it to a watch list, right? And that's what I did this morning. I added it to my eMAC watch list. And I can create a new watch list based on a different study or whatever. And I do have a few here. But if I like this filter, or when I create a filter, again, I can save that screener. And this is one of the nice features about a premium membership, is not only can I have an unlimited amount of screens that I can save, right? There's my eMAC, but I also can send this to myself in an email, the screening of the page and these two inputs that I put in. Now I can get a midday report, or I can get an end of day report. I kind of like the midday report. Why? Because now this is kind of an actionable page, right? I want to make sure that I get the information during the trading days in case there's an opportunity for me to trade. Now, it doesn't mean that I have to do that. I don't have to be in front of my screen. I certainly can get this information at the end of the day. And in terms of an investment trader, like I talk about on the weekly aspect, now this is going to signal for me and to give me the permission to set forth my trading rules that allow me to take a position. And I can change the results from 10 to, let's say, the top 50. All right. All right, let me just check my notes here, make sure I didn't forget anything. All right. So let's go talk about now, the eMAC is nice for giving us a buy signal, but it's not an all catch-all. Right? We want to do other technical analysis. Again, multiple time frame analysis is one of the things we can do. So we can talk about some complementary technical analysis. And one of the ones that I find that is really a good complementary is the relative strength index. Now, why? Well, a MACD is a bounded, an unbounded value, meaning that the value of the MACD can continue to, in theory, go to infinity, right? There's no edge to it. But an RSI is bounded, and it typically stays between 100 and 0. And if you're not familiar with an RSI, anything above 70 is an indication of what is called an overbought zone, not a sell signal. Anything below 30 in an RSI is an indication of being oversold zone, not a buy signal. And they kind of complement to each other. So here's a great example. Here's Tesla, and I'm sure you've all noticed what's going on at Tesla recently. And here's our eMAC on top. And look at these values, right? Normally you see, we float right around 0, 2, 3, 4 above, 2, 3, 5 below, right? But look at this, we got 100, right? 75, right? There's no limit to how far the eMAC could go in this instance with Tesla, but our RSI is bounded between that 0 and 100. So again, this is kind of a complement. So we do see that our trend is widening, our values are getting greater. The histogram is telling you this trend is strengthening, and then the RSI is confirming that with us, right? We're in what would be considered the overbought zone. Now, it doesn't mean this is a sell signal. It just means that we have traveled a long way and that the strength of this trend is really, really strong. Now, typically, RSI traders would say, hey, if you get into this overbought zone, let's look for a selling opportunity. But right now, Tesla is not showing any selling opportunity. So there's no resistance, right? Sky's the limit in terms of where this could go. We might want to wait for other indicators. And another complement, I believe, to the MACD is volume. And volume is certainly one of the technical indicators that we should be using at all times, regardless of what other technical analysis that we have. Typically, volume precedes a price movement, and you can kind of see that in Tesla here. We did see a big spike in volume right as we are starting to break out, but look at this big spike in volume as price really started to accelerate. Notice also that this price volume down here, here, and here, and here is where our MACD and our RSI crossed over and went to what we considered an overbought signal, right? Not necessarily a sell signal. It's just telling us our trend is strengthening. All right, so let's go to everybody's favorite, Apple. And again, as this loads up, I'm going to pop this out so we can really see a nice picture here. And I know this kind of looks a little messy right now, but I'm going to walk you through it. So this is a template that I have created. Notice it says up here, webinar. And it has my MACD. It has my chart, price of Apple, has my RSI, and it has my volume. I've just configured this by moving these arrows up and down and moving them into the way I want to view it. So let's kind of review a couple of things that we've talked about. First of all, we said that when we get into the positive, right, this is confirming an uptrend, and we do see that here. Now, what I do want to let you know is that sometimes in uptrends, we might get a MACD crossover to the downside. Now, these are not as reliable as we do when we see them on the buy side, or when we move from below to above, when we move from above to below. And you can see that here we had several crossovers to the downside, maybe sell signals, but they weren't as reliable as this uptrend was continuing. Again, what is our histogram telling us, right? Our histogram telling us that we're in an uptrend, positive values, but this uptrend's momentum is slowing. So what we want to look for, if we're going to use this as a sell signal or an indication to exit this trade, we want to look for something that's called negative divergence. So here we can see Apple made a high as our RSI confirms we're in the overbought zone, and our MACD got to a peak. And then our momentum stalled. We're still in an uptrend. Our momentum stalled. We're still kind of sideways to an uptrend, kind of grinding it out. And Apple made a new all-time high. Positive price action, but the MACD didn't confirm that. In other words, we didn't see an increase in the momentum of this trend. Matter of fact, the MACD fell below the peak of when the last high was. This is a negative divergence. This would be an indication for us that this would be a better sell signal in terms of entering this market from the short side or exiting Apple if I was long Apple. And again, we talk about price action in terms of maybe charts, right? We got the MACD negative divergence, but we didn't get the crossover until the price action broke below, let's say, a weekly low here, and it broke down on greater volume. Again, using volume as another confirmation. Now, one of the other things we can look at is our RSI, and this is why this is kind of complementary. Again, our RSI made a peak high here on this all-time high, and that when we made the new all-time high, the RSI did not get back above the overbought scenario. And this negative divergence is unique to RSIs, and this is called failure swing. Again, when we make a high and we go into the overbought zone, and then we make a new high and the RSI fails to get into the overbought zone, this is a bearish or potential sell signal. So all three of these lined up together, that would be a better opportunity if I was going to use the MACD for an exit or a potential sell signal. And you can see that Apple did go down. Now, we did fall down here. These two lines here is my 20-day moving average, and this is my 200-day moving average. We did go below the 200-day moving average. Again, now what we're seeing is our MACD telling us this short-term price action is losing its momentum, and now we get the crossover, and our RSI is starting to move from what we would consider the negative RSI below 50 to above 50, turning to the positive. So they are confirming that this market is now starting to gain momentum to the upside. We recaptured the moving average, the 20 and 200 day, on some nice volume here, and that is sending our Apple stock back up. Now, again, I might want to look at different time frames on this one. Again, reinforcing what I'm seeing in terms of my trends. All right, so that's Apple. Let's go back to, actually, let me jump ahead here. And we'll come back to, no, let's do this. Let's go back to the Qs. Which I started with. Again, what is the picture we're seeing here, right? What is our MACD is telling us? So if we go back here, here's our buy signal crossover, right? Maybe I want to wait for us to move from the negative to the positive to confirm my uptrend. I'm not worried about this crossover. It's just signaling to me that I might need to do some adjustments to my trade because I'm still in an uptrend, even though my momentum has slowed. But again, here was that negative divergence. I made a high, and then we didn't make a new high. Change in momentum, that would have been a signal for me to exit this trade, or at least move my stop closer to the market to make sure that I capture profits. Now, our trend falls, our price falls. We get the MACD crossover. Price reverses. And now our trend is strengthening. Our histograms are getting wide, right? And our price action is going higher. Now notice what is happening. The NASDAQ is making a new all-time high, and we are above this value, and you can see that our MACD is confirming that, right? Our MACD value is above the most recent high, not a negative divergence, but in this case, a positive confirmation. This is one of the ones that popped up on the screen a couple days ago. On the screen are a couple days. This is Goodyear Tire. And there is our MACD crossover. And you can see that since that crossover, Goodyear has really started to move. Our histogram is widening, confirming that our trend is strengthening. We are in the positive. That's telling us we're still in an uptrend. You can see we're still in an uptrend. But let's go back to here and back to here. And this is what I kind of showed you in that Campbell's soup example of how I can use MACD when my market is bottoming or I'm coming out of a downtrend, right? We want to kind of catch these trends as they're going up, not after they've already gone up, right? So here you can see, you know, Goodyear has been making a series of lower lows. That's a sign of a downtrend. Here is a low that corresponds to a deep MACD. And then what is happening to our trend? Well, it's actually lost momentum. It actually gained a little bit positive momentum. And then we made a new low, lower low, right? Still a downtrend. But our MACD didn't confirm that trend because it had a positive divergence. In other words, the MACD's low was actually higher. Think about that in a trend, right? A series of higher lows is a sign of an uptrend. Now, when we see this positive divergence in the MACDs, we still got to wait for that buy signal. But the next buy signal that comes about on a MACD crossover, this is a very strong signal for us. And this is one that we want to look at. We want to really look and see if this is, I can afford the risk on this particular trade. And there's our buy signal on the volume. Well, let's check our volume on this one, I believe. Let me go to webinar. All right, little uptick in volume. And we recaptured the 20-day moving average, and off to the races we go. Now what's happening today, right? We get a crossover. Our RSI is strengthening, right? We're accelerating in price. What was the other step that I want to make sure? Well, I want to look at multiple time frames. If I go down to my monthly 60 minutes, already had positive. Histogram is nice and strong, confirming an uptrend. We're in the overbought, very strong RSIs, not a sell signal. It's telling us that we have a very strong uptrend. And price is still moving higher. Let's look on the weekly. Again, our histogram has now moved from the negative to the positive. We've already had a weekly crossover. So the daily crossover that we got today is in concert with our weekly crossover. So I have a lot of confidence that I can take this trade in terms of the buy signal, even though the trend has already been going up in the short term. Multiple time frame confirmation, right? And again, we're starting to see on the weekly basis, we're starting to see some increase in volume. So there could be something that's going on with Goodyear. All right. So I see a couple questions. Let me see if I can answer a couple questions before we break for today. And then I do want to give you guys one more, a couple more takeaways.
Okay, John, if I could ask you, because we've had a couple people ask, how did you get your MACD at the very top of the chart? And I told people I would try to get you to, I think you mentioned this. So the very, very far right side of the chart, there's these little arrows, and you simply click the arrow to move it up and down. That's how John got that MACD sitting at the top of the chart. Great. Okay, thanks for showing that. And again, you can save this as a template if you want to, just as John had saved a webinar template. I'm also going to point out, John, while you read through the questions, you showed us a way to, there's an eMACD new buy signals page on Barchart's site. In order to screen on that page, that is a Premier membership feature. And if you're not a Premier member, we do offer a free 30-day trial that I really encourage you to take advantage of. However, there are also other screener filters in the stock screener for the eMACD, such as looking at the eMACD signal, whether it's a buy, sell, or hold, the eMACD strength and direction. So you do have screening capabilities on that, even if you are not Premier. But that page that we offer you, a great starting point, that is a Premier feature. And again, I encourage you to check it out. Okay, John, back over to you.
Okay, thanks, Gene. I appreciate that. Yeah, I think one of the nice things about the Premier membership, and at least trying it out, is the value of being able to do all these extra things, screeners and sending yourselves email lists and all that. So I see a couple of questions here. What's the difference between a MACD or a eMACD? It's just a MACD uses simple moving averages, and they're kind of a little bit slower, and the eMAC is using the exponential. Again, a little bit more sensitive to current price. And Ryan asked the same question, so I see a couple folks are asking that. When you say widening, David asked, when you say widening of the histogram, don't you really mean the height? Yes, I mean the wider the difference between our signal line and our MACD line, the wider they get, the difference between the two of them will increase the height or narrow the height of a MACD. So good point there, David. George asks, do I ever use the MACD in conjunction with RSI to identify stocks that are overbought or oversold? So I think, George, I answered that question for you. I think RSI is definitely a great companion to the MACD. Timothy asked a couple questions here, so I want to read through Timothy's questions. He said, on the Campbell Soup chart, you thought you looked back on the 21st of June. It looks to be what is the start of a weakening of the MACD. Why would those two periods be different from a 6-month low as you showed us? So let's go back to that chart. I think Campbell's is CBP. No. CMP? Now you got me thinking about this. All right, we'll have to go back to our, let me look at my notes. Let me just type in Campbell's, see what happens. There it is. CPB. All right, I knew it was close. All right, so we'll put back my webinar. So what is Timothy asking here? See, on the 21st of June, MACD was one, but we're still in a downtrend, right, Timothy? We're waiting for that positive crossover, right? Here was the crossover. I guess this is what you're talking about back in here, right? Yeah, again, we want to look for other indicators that are going to help us in terms of our MACD crossover. Our RSI wasn't overextended. We're still making lower lows. So I think that's what you're asking me, right? Glenn asked, can you give an example of a reverse buy signal, such as waiting for confirm for a downtrend? And I think we did that, Glenn. I think I showed you that. All right. Okay, what time frame? Peter asked what time frame is the best for MACD for day trading? Great question, Peter. So I think you got to use daily as at least as your jumping off point. But depending on what markets you're trading, if you're trading futures markets or Forex, maybe you could do a daily 4-hour and then maybe use a micro time frame like 30 minutes. If you're a stock trader, maybe you could go down to an hourly, I think would be a good one. When I'm day trading and I'm using the MACDs, I will kind of stay at that daily 4-hour, 1 hour, or daily 4-hour, 30 minutes. I'm not a big fan of going into the micros down in below 15 minutes, 5 minutes. I really kind of want to look for that bigger picture scenario because I believe in my philosophy of trading, when I find those opportunities, those ones are going to pay off, right? Big time frames, big money, little time frames, little money. Okay, Peter. George asks, is the MACD supporting indicators for more reliable broad-based indices? Yeah, I think you can rely on it a little bit more, George, but again, I would be more concerned about staying in, looking at the broader in terms of a weekly and daily and not getting too consumed or sucked into looking at, hourlies or 4 hours. All right. Let's see what else we have. A lot of great questions, guys. I see. I'm trying to answer most of these. I think I got most of these. Do you prefer the EMA versus the SMA? Again, I want to be more sensitive to current price action, so that's why we would use the EMA, and that's how the page is designed. So that's why we would use the EMA. All right, where are we at in time, Gene? We got time for a couple more questions. So again, Timothy asks, if we don't want to over-rely on the MACD, when the crossover is moving to the downside, you chose the 6-month interval for Apple on the flip chart. 6-month, not interval, but 6-month data field, yes. Any insight to why you'd started with the 6-month? So I could have used any time frame in terms of data. I just like 6 months in terms of stock, right? Stocks that kind of move in quarterly and 6-month periods. There is a theory that says that what happens for 6 months in the stock can continue to happen for the next 6 months. That's kind of a relative strength theory, not relative strength index, but relative strength theory. So I could have done a 6-month here data field, but I could have gone out to 2 years, and this would still be a chart of daily candles, or I could have gone down to, I think 3 months is still daily candles. Yeah, there's still daily candles as well. So it's just a preference. It's our default setting. Just want to see what has happened over the last 6 months. All right. Okay, so let's end there. I think I've answered most of the questions. Anything else, Gene, you want to add?
A lot of people are asking whether this is going to be available to watch again later on. So why don't we go through, talk about where you can find archived webinars. And I do want to mention that everyone here will get an email in a few hours with a link to the recording. But John's showing you where we archive everything and where you'll be able to find this recording later on.
Exactly. So before we talk about our upcoming webinar, let me go back to my slides, and I want to give you guys a few takeaways here. All right, so again, MACD oscillator is a trend following momentum indicator, which often is beneficial into warning us of upcoming price changes or trends changes. Trend changes and price changes from a downtrend to an uptrend, and trend changes or price changes from an uptrend to a downtrend. We still want to do other things in our analysis to confirm them, but it's certainly a great tool to warn us of opportunities or changes in this trend. The buy signal, the MACD buy signal, occurs when that MACD line crosses from below to above that signal line. The sell signal is less reliable in uptrends. It's just a probability. So if you're going to use it as a sell signal, make sure you look for that negative divergence. So positive and negative divergence helps enhance the MACD's ability to recognize these momentum changes, right? So I'm not going to just take this signal as is. I want to make sure that there are other indications, in this case, these enhancements of negative and positive divergence. And again, the MACD alone is not an absolute indicator. We want to work it with other technical analysis, volume, RSI, and I didn't really go into this today, but candlestick patterns. For instance, if I have a MACD crossover buy signal that has just come after a bullish engulfing candlestick pattern, well, that would be an enhancement to my MACD buy signal. And vice versa, if I get a MACD sell signal after a bearish engulfing candlestick pattern, that would be an enhancement to that sell signal. And then finally, this concept of our histogram, right? That change in momentum in different time frames, looking to see if my momentum at a higher time frame is in concert with the momentum of my shorter time frames or my intermediate time frames, right? So the histogram sensitivity to short-term price movements or short-term momentum changes can be used to help us signal opportunities inside of trend changes at longer-term trends. Lower time frames to dailies, to weeklies. Okay. Well, I think that's a lot of stuff to digest, don't you think so, G?
Yeah, John, you gave us a lot to digest and some really great information, so thank you.
Okay, so next week, what we're going to do is we're going to have a very unique webinar, something that is a little bit of steps away a little bit from Barchart. It's kind of more about the philosophy of trading that I use. But the concept basically goes like this. In futures trading markets and Forex markets, for example, there is this probability that happens every day where that when the economic centers or the financial centers around the world start trading, London, Tokyo, New York, this inflow of orders knocks the market out of balance. And when the market becomes out of balance, that is opportunities for us, right? Chaos, opportunities. What we find is that there's this probability that happens that in the morning sessions around the world that we will make a low or a high, and that this is that opportunity we're going to look for. And typically what we'll see is a low might be made, let's say, during the London session for some of these global markets. For instance, oil and gold would be ones that would come right to mind. That there's a low that is made during the European market, and then during the US market, that intraday trend, let's say we have an uptrend, that intraday trend will now make a high. That high will actually come in that concentration time frame of when the US market is out of balance. And so if you are really in tune to your market and you learn this process, then you can start finding trades based on the probability that you know that a high or low is going to be made in a very short window of time. Now, what we're going to do is we're going to take that information and we're going to look at our futures trading guide, which has already deciphered our trends. We use a 9-18-day moving average trend and apply that. In other words, if my futures trading guide is telling me I'm in an uptrend and my European session made a high, then I'm going to look for that low in the US session to buy with my uptrend. It's a very fascinating concept, and I think you guys will really, really enjoy it. For my equity traders out there, there are some crossovers. But because equities only trade in New York or in Tokyo, right, or European markets, there is a different window. We will talk a little bit about that. But for my futures and Forex traders, come in and check this out. I think you're really, really going to enjoy this one. All right. Well, listen, I want to thank everybody for coming. Gene, thanks for a great session. I want to wish everybody the best of health. Be safe out there and the good of all trading.
Thank you, everybody. We really enjoy having you here with us, and we hope to see you again at a future session. Take care now. Bye.